Hey everyone, I know we ran into some technical issues today. I'm so sorry, but we will get this fixed very quickly. In the meantime, we don't want to lose momentum and everything that we talked about yesterday so that we can really move forward in day 2 of our challenge. Day 2 is a really important time because what we're doing today is making sure that we take all of the data that you gathered, your bank statements, your sales reports, your labor, and we're going to turn it into something useful. Now, it's not going to be all done today. It's not going to be perfect today, but today is a really good place to start. So what we're going to do is we're going to put everything into 4 buckets. So when you log into our course shell, what you're going to see is our forecast setup, right? So our weekly forecast. Now, I know you guys use forecast a lot with your staff, but what we're doing is not changing the forecast. We're expanding it so that it's not just a sales forecast, but it's actually a cash flow forecast. So consider this a blend between probably what you're already doing, which is talking about the revenue numbers and what you think next week looks like, and all of that with your management team, to ultimate accountability to how the restaurant actually performed. So what I want you to do first is look at your 4 weeks of sales data. So what you're really looking for here is your average, but also keeping in mind some things that may have made those 4 weeks different. So if you pulled the last 4 weeks, chances are 4th of July is included in there because we're, at the end of July, early August. So if you have 4th of July week, maybe we want to consider that as an outlier. Maybe sales were less on 4th of July because people are away. Maybe they're more at 4th of July because you had a special event or people like to come out and celebrate the 4th with you. Either way, that's an outlier. The other 3 weeks may be different than that week. So we want to maybe use our forecast as similar to the last week that we had versus an average. So again, this is up to you. There's no right or wrong, but we want to be thoughtful in this, right? We don't want to just say, well, I'll take the average, but we want to really think, maybe I see a trend up and I see that my last week of sales was my strongest of the 4 weeks. So maybe my forecast this week would be to match last week's sales or even improve it by 5% or $1,000 or something that we know is realistic, but also pushing the needle to set a good target. Right? So that's going to be our revenue. Now, when you see in your forecast tool, we're actually going to build that out for the next 4 weeks. For now, we can use the same number. Again, part of this challenge is just getting used to us seeing a bottom line every week. So what we're building here isn't perfect, but the goal is that we have a good prediction for positive cash or whatever the cash balance that we come up with. And then we're able to see how close were we to actually getting there. Okay, so that's the easy part, actually, the revenue, because that's coming from a report. The next one is our cost of goods. So yesterday we asked you to gather your major supplier cost of goods. That's a starting point because we want to see what are we actually buying every week. Now, if you're not in a position where you're taking inventory every week, ideally, we want to, but if we're not, that's okay. That doesn't mean we stop and we give up on the challenge. If we're not, what we want to do is 2 things. We first want to know what is our cost of goods percentage that we should be running. If you don't know, use the last time that you thought you knew as a starting point, right? None of these are deal breakers. We are going to find out the actual as we continue on, but let's start with 30%. If we don't know, let's use 30%, 32%, whatever we think it could be, right? But we need a number. Taking our sales forecast and multiplying that by our cost of goods percentage gets us to our cost of goods forecast, right? So if my sales are $10,000 and I run a 30% cost of goods, then I should not be spending more than $3,000 a week on food product. All of a sudden, I have a target for my team. I don't care what sales are, but I want to make sure you're not spending more than $3,000 a week on cost of goods. Okay, so that's our first bucket of our expenses. So we have 3 buckets of expenses versus our revenue number. Second one is labor. Now, I know labor can be hard as well. We probably, from our bank activity that we asked you to pull, we have total dollars that go into labor. We also probably have our payroll reports, but maybe it's biweekly. So that also is hard. We want to come up with a dollar labor number. So if you run a biweekly payroll, maybe it's half of your last payroll. If there's a way to get more detailed than that, that's great. But we want to tie it back to the actual dollars that come out of your bank account for payroll whenever they come out. So if they come out once a week, that's easy. You have that number. If it's biweekly, divided by 2, right? Whatever that is. Now, again, this is a target. The other way to do it is set a target. Say, my goal is to spend 35% is what my labor should be. So if my sales are 10,000, then my total dollars in labor spent should be 3,500. Now, labor right now is going to be the hardest. It's changed so quickly. You have a whole new staff that is at a different rate than they were a year ago. So if you don't know, that's fine. You're not doing anything wrong if you don't know. We want to find out. So again, that's why we're in day 2. We're not in day 7 yet, right? This is just about setting that target. The third bucket is going to be everything else that you've spent over a month divided by 4. Now, the reason I say a month is because our rent is paid once a month. Our utilities are paid once a month. So if we took just what you spent in other costs last week, that may not be including everything because maybe last week wasn't the week that you pay rent. So what we're going to do here is have you go back through your bank activity, taking out payroll and taking out anything cost of goods related, and what do you come up with that's left? So ideally, if you printed it out, literally circle everything that's an operating cost, marketing, dues and subscriptions, everything else, add it all up and divide it by 4. So if I came up with $15,000 over the course of the month, I'm going to take $15,000 divided by 4, right? So $3,750, I think, not a lie, right? But so we're going to take that divided by 4 and put that in. Now, in this case, we may not spend $3,750 every week because, again, rent comes out once a month and utilities come out once a month. But we want to see a trend and a bottom line that gives us a good indication of where we are every week. Over a 4-week period, it should still equal our $15,000, right? It just might be everything hits at the end of the month or the beginning. This will be really helpful to know for our cash flow because I want to know I should spend a total of $15,000 over a 4-week period, but most of it hits at the end of the month. So just going through the last 30 days of your bank activity is very eye-opening to really see how do all these expenses impact your cash flow? Because if it all comes out the same week as sales tax or something like that, then we really need to be aware of that when we're planning out our cash flow. So those are the 3 buckets that we're going to work on today. So your homework assignment for today is to use the Excel that we have in our course shell and build out your weekly forecast using these 3 buckets. So you should have your revenue target, your cost of goods target, your labor target, and your operating cost target. Now, again, it doesn't have to be exactly what it was last week. It's your target. What do you want the business to do every week? Being realistic for where you are right now, but targets that you could then communicate with your team as well as really trust are reasonable for where we think the cash flow will be. So what we're going to do tomorrow is really talk through what does that look like? What did we find there? But the first step is build your weekly forecast with those 3 expense buckets as well as your revenue target and see where we end up. Is that a good outcome? Are there things that we could change? What do we think for where we are so far? So I think you'll find that this is incredibly eye-opening, especially the part about going through the bank activity. And it's a really good starting point to a better understanding your cash flow in your business throughout the month, which will be the starting point to transitioning to our weekly accounting model. So please feel free to reach out if you have any questions. But for tomorrow, we should have our weekly forecast built all the way down to the bottom line. So that's huge. And I think that will be a great place to start as we move into how do we make this accountability and check that these are actually reality. But we have to have a target first, right? If we don't have a target, then we don't have anything to compare it to every week. So again, you should see information boxes if you do want any help with this. We are here, and I look forward to seeing you tomorrow.